Red Hat, the biggest seller of the Linux operating system, reported its third quarter earnings rose 59% on stronger sales and margins. Now, for more on the quarter and Red Hat's role in the hot new cloud computing world, I guess it's not that new, but we're joined by the company's CEO, Jim Whitehurst, who's in slightly warmer North Carolina than we are. Jim, thank you so much for joining us. And one of the things I wanted to ask you was about billings, because this is really where you guys make your money. Going forward, are you going to be able to keep up the same pace, the same kind of market share that you've had before? Is this market essentially too saturated at this point?
Oh, we are still a relatively small share player in some pretty big established categories. You know, we announced our total revenues, or we guided total revenues for the year at around $900 million. The operating system market alone is a $21 billion market. So we are very disruptive, and obviously our unit share is much larger than our revenue share because our price point's lower. But there's a massive opportunity there. And as you said, with this move towards cloud computing, other than Microsoft, every cloud out there is built on Linux and open source software more broadly. So we're in the very early innings of a very long game.
You are, but let's talk about JBoss, because you know this is something that was supposed to be a big growth driver for you and hadn't worked out in quite that way. What's the room to grow there?
Well, that's about a $10 billion market, and we don't break out JBoss numbers, but they're obviously much smaller than our Linux numbers. So that's a very, very large market. We acquired the company in 2006, and it was a very strong brand with a strong team, and I think we had some growing pains early on as we tried to get that integration to happen. But we've guided, I think, consistently over the last couple of years that it's growing more than twice the pace of the core business. And given that we're growing at 20%, that obviously means it's growing very, very rapidly.
When you look at the way you all have guided, and when you look at the research on Red Hat, you are very closely tied to the U.S. economy. And yet, it also looks like you guys might actually be doing some hiring. You've got the cash to do it. You might even be putting out feelers for some new space, maybe in Texas, maybe in Georgia. Are we going to see more people join your team?
Oh, absolutely. You know, we've been very clear with the street that we have a scalable business with a lot of growth opportunity. So we've committed to giving 100 basis points of margin improvement a year that we take out of overhead. But otherwise, our core R&D and sales and marketing, we're growing with revenues. And given we're growing at 20+% a year, we're certainly growing our headcount at a similar pace. And that's really globally. We've grown a lot in the U.S. But we've also grown a lot overseas.
Well, one of the big questions that tends to kick around about Red Hat is whether you all are an acquisition target, but you're pretty expensive right now. Do you think that makes you less appealing in sort of the corporate mating stance?
Well, yeah, I think most of the M&A that's happened in technology has been smaller transactions, kind of less than $5 billion, and we're obviously a lot larger than that. So it's hard for me to know what the super giants are thinking. But you know, at our valuation and with our prospects, I think we have a great opportunity as a standalone company, and that's really what we're focused on right now.
All right, Jim Whitehurst, thank you so much for joining us. Jim Whitehurst, the Red Hat president and CEO.